Greetings and welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor at wealthmanagement.com's RPA Edge and CEO at Trow, TPSU, and 401k TV. I review all of last week's stories and select the most important and interesting ones, providing open, honest, and candid discussion you will not get anywhere else. So let's get real. First story, as Yogi Berra once said, it's deja vu all over again, with a Florida district court overturning the DOL's fiduciary rule, citing overreaching by the agency when applied to IRA rollovers. There's another lawsuit pending in Texas where the original Obama rule was overturned. At issue is whether the five-part test, particularly the requirement for an ongoing relationship, is satisfied with an initial IRA recommendation. Experts, however, are cautioning the industry to act as if the rule will go into effect until a final decision is rendered, with the DOL appealing the decision, something they did not do under the Trump administration. Next story, the Portability Service Network, a consortium of DC record keepers begun and partially owned by the Retirement Clearinghouse, welcomed Empower, joining Fidelity, Vanguard, and Alight. All told, the group administers a stunning 60.8 million accounts and 118,000 plans. While the network's initial focus will be on making the transfer of low balance accounts easier between record keeper members, limiting cash outs, the impact should have much more far-reaching effect by establishing an industry-accepted data exchange which could facilitate other participant services. And while only 6 record keepers will be owners along with RCH, and none will receive additional compensation, all record keepers are welcome to join. Next story, the DC industry has united to oppose the SEC's swing pricing rule, which allows fund companies to pass trading costs to first mover traders and non-existing investors, which may disadvantage retirement plans requiring earlier time to submit trades while delaying distribution as much as a day, and adding costs to record keepers who will need to update their technology. Investors would no longer receive the NAV per share they have come to expect for their transactions. Instead, at any time, investors could receive a price more or less than the NAV, which would occur without the investor actually knowing how much the NAV will be adjusted at the time they enter their order. Overall, there were 150 comments submitted. The rule has support from academia and the CFA Institute and is already in place in Europe. Next story. The reported late last year, it's worth mentioning that M&T Bank is planning to sell their CIT division, Wilmington Trust, to Madison Dearborn, a private equity firm that also owns NFP and FlexPad. Wilmington Trust brought lower cost CITs to the small and mid-sized DC market through RPAs, which are rapidly replacing mutual funds. With a 90% plus market share, Wilmington dominates this segment and could expand their reach by greater investments in technology and distribution while increasing the roster of funds. The deal is expected to close mid-March. Finally, on the heels of the latest 100 most influential list, which was dormant for almost a decade, I listed the 10 most impactful people, in my opinion, in the 401k industry, focusing on those that created something unique and impactful, good or bad, and are still active in the same or similar role. Check out my list, which included 2 record keepers, 2 RPA aggregators, 2 attorneys, along with an academic, legislator, banker, and lobbyist. I also noted some people to watch. So those are the most important stories from the past week. I listed a few others I thought are worth reading. Please let me know anything or if you have any other comments. Otherwise, I look forward to speaking to you next week on 401k Real Talk.